All right, one shot, one kill trading model. So I will be going over exactly the one shot, one kill trading model and how we use it, etc., and how you can potentially use it. This is a trading model that I developed, and you can use it for your own or use it as inspiration to create your own trading model. So one shot, one kill. On the left, we have the notion right there, and it says daily PD rate, 1 hour ST, entry on first FVG of ST. That is ideal. Cover ST low/high, target opposing daily PDA, use the economic calendar. If SL is too big, enter on first PDA in premium and discount. No trades on Friday. Be careful of Thursday. Go break even according to order flow. So to fully clarify on this, it is very essential why this model was created in the first place. It is to catch the weekly range essentially, and to make it very easy for people that are very time restricted to also have some sort of easy trading plan to follow. So if you're working 9 to 5 or whatever, or you're just very busy with another business, etc., then this could be a great trading model, or this could act as some sort of inspiration, because you could use the same thing if you even have less time off of a weekly PD raise and then using 4-hour ST. That's the exact same thing. It's just fractal. You just scale it up and down. So first off, we need to understand, again, we start off with some kind of filtering process. So you go over all the pairs, etc., that is taught in the higher time frame. This does require some work. But once you have this, then it is very easy to roll with it, in a sense. So the most work that you have to do is going through pairs and going through instruments, whether it's indices. You could also just stick to one trading pair, right? And that is where the flow trading plan that is coming up also will help you in. So if you have less time for 1 week, you could say now, all right, I'm just going to focus on one shot, one kill trading setups this week. And that is perfectly fine. Now, if you apply the filtering process, it will be easier to find a setup, because you're always scouting for trending models or for trending pairs. And when you're only sticking to one pair, it might just not trend that week. So that is why we use the filter process. And again, that is also where the economic calendar comes in. So using the economic calendars, ideally, you want to be focused on executing on the days where we have that 1 hour ST, and on the day where we have the economic calendar supporting that ID. So that is exactly what I will be going over right here. So if there's a Monday, for example, with no news to support the ID, then you wouldn't execute on those IDs and on that pair, essentially. So these are examples that I noted down. Some might be a little bit different, but this is great to study for your own. If you do plan on trading this, then these are just a few examples. Again, there are way more examples out there potentially. So you can also find examples on your own. Now, I have a few that go way back. It's not because I went all the way back and needed to find a setup. It's just where the clear daily range and the weekly range was set. And I just went into the 1 hour, etc., and just a perfect example. So these are some examples that you can study right there. Now, if we go over one example that actually happened this week. So right here on Australian dollar CHF, we came off of a weekly order block right there. But this is not even that relevant, right, for your one shot per kill. The only thing relevant is now, all right, if we are continuing lower, we've been continuing lower right there. We might still be heading lower towards these lows right there. If we are heading towards these lows, how can we get involved from a daily premium array? So what you would do for the filtering process, you would go over the daily time frame mostly and see, all right, where is it heading? Is there likely a clear weekly range forming? Here, there's likely a clear weekly range forming. At least the possibility is there, because we have a premium array on the daily time frame sitting right there where we can expand lower from. So the potential is there. All right, is there news supporting that ID? And this is what you would do on Sunday, right? When you have the free time and you're not that busy, this is something you can do on a Sunday, where you filter out the pairs that you want to trade for the coming week. And the only thing you have to do now is watch those pairs, see if a daily premium or discount rate is getting hit, what you expect it to, then have a 1 hour ST, then place your limit orders, etc. and that's all. So right here, you would target lower. Now the target is the first, or this depends on the RR a little bit, but the target is the first. Initially, it's the first daily discount array. So what is the first daily discount array? In this case, is this swing low. And then afterwards, we have that fair value gap sitting right there. Now, if the RR allows it, then we would target only that first discount array right there. So if we now drop into the 1 hour, let's actually use the replay tool for this. We are on a Tuesday. Tuesday, there was news later that day for CPI, Australian dollar. So as well, for this one shot, one kill trade model, you are less dependent on kill zones. So I wouldn't really pay attention to kill zones. I would more so pay attention to the days where we have the economic calendar supporting our ideas. And as well, CPI and FOMC and NFP, they might be great trading opportunities as well, because the 1 hour is more so a swing. And if you're trading FOMC on a 5-minute base or 1 minute base, then of course you will blow that account. But on a 1 hour base, it's different. It is different. So play around with that and see what you like to use and see how you can use that to your advantage. So right there, we would expect a sting into it. All right, we have a sting into it there. There's our 1 hour ST. And ideally, we want to enter off of the first fair value gap off of that ST. What do I mean with the first fair value gap of that ST? In case we want to see bearish prices, I want to enter on the first bearish fair value gap that was created right there, which is that one right there. That is the ideal scenario. Now, you will not always, because in some examples right there, I think GU as well, you will not always get an entry of the first fair value gap. In that case, you could also make some rules where you only enter on that re now. If the re doesn't provide an entry, you just leave it. You leave it for that week and you look at another pair on instrument. And again, you have to keep in mind, right, that waiting for these setups will take way longer. And sometimes you will have 2 weeks where you won't have setups. But that's the consequence we have to deal with, right? If you're already working another job or anything, that's perfectly fine. This is just an extra. This is just an extra. See it as an extra. This is not supposed to be your main income. This is just your extra. And then slowly we can start to potentially create that main income, right? But see this as an extra. So when you are focusing on one shot, one kill setups, you might have a few weeks where you don't have setups at all, or you miss a few setups, etc. That is perfectly fine. Don't stress about it, because you're entering off of a weekly range. So obviously it takes weeks sometimes. And that is why the filtering process is very useful, because then you potentially have one setup every week, or potentially even 2. So that is where you would enter. Now, if you're not sure where to enter here, what we also say here, if SL is too big, enter on first PD array in premium and discount. So for example, if you were to enter here, the SL is pretty big. I don't like this. I don't like this huge stop loss, right? So what we could do here is draw your premium and discount on that range, and then enter on the first premium array that is in premium in this case, because you're looking for lower price, so you want to enter in premium, of course, which is that fair value gap right there. So that would be your entry. And this is as well, if you want to make this a standard rule, so a mandatory rule for your trading plan for your one shot, one kill, that can be perfectly fine, right? That is how you eliminate those low entries. But keep in mind that you sometimes might miss entries when we do take off of here. But if that's something you're willing to live with, I would be willing to live with that. So if that's something you're willing to leave on the table, that's perfectly fine, right? That's perfectly fine. So the target right there, that low, that is your first target. And you're catching the weekly range. Right there, boom, first. Now let's say you miss this. If you want to create, and again, this is, you can get so creative, and that's exactly what I'm trying to show you here. You can get so creative with this, because eventually you can draw your premium discount again, and you would now take a re-entry potentially off of that order block right there. That is the order block that is in premium. You can also use that, but this order block is already in premium right there. Again, cover that. And maybe potentially even aim a bit lower. if this is break even, would this be break even now? I have go break even according to order flow. This is not going back above that. If this is continuing lower, this is not coming back all the way here to then eventually continue lower. It's not doing that. So that is what I mean with go break even according to order flow. That's exactly the order flow you learn in the higher time frame, in the execution, etc. All right, we missed that entry. So no re-entry, perfectly fine because we already caught this. So perfectly fine. And right there, we continue lower, and that is our take profit hit. Now the take profit is also what you could do for yourself. Is I personally would prefer to take everything off right here, but you could also take partial. So if you notice, all right, this target is pretty close and we do have a clear discount array still to aim for, potentially this order block right there, then you could say, all right, I want to maybe potentially in the future, I want to focus on trying to take partials here for 80%. So 80% off here and then leave 20% to run to take profit here. So you're fully trying to catch the actual full weekly range, because obviously when you are trying to catch the weekly range, if there is a nice weekly range, it will not stop here. It will focus on a discount array that is even a bit lower. So it will not stop there. And eventually, if you do want to incorporate, and this is exactly what I'm trying to show you, you can get very creative with this. You could use potential swing projections that line up with your Fibonacci, and you say, all right, this is pretty close to my swing projection there. I would want to aim for that one. And that is exactly how you can get to your perfect exits as well. So that is how you can get very creative with this and create your own rules. So you can see this as a sort of naked model. This already is a very good model. The only thing that's very important is finding the pair, obviously, that wants to move. So using the economic calendar, using the filtering process, and then using these type of entries. And you can see that the RR for catching these weekly ranges and catching the one shot one kill trades is actually very great. It offers a lot of RR. So don't suffocate the RR as well. Don't try to aim for 1-to-1 because next week you might take a loss. Leave it to run for that weekly range. That is very important. So again, what did we went over? What is the basis of the trading model right here that I'm trying to teach you? Daily PD array, 1 hour ST, entry on first, fair value gap of ST. What we saw here, cover ST, low/high, right there. You cover the ST, target opposing daily PD array, right there. Go break even according to order flow. And the next thing that's important is you ideally want to get involved because obviously you're trying to catch the weekly range. So ideally you want to get involved on Monday, Tuesday, Wednesday, sometimes Thursday. But according to your data that you will be collecting, see if Thursday is very fruitful. If not, I would also remove it. So no trades on Friday. That is a no-go. No trades on Friday, but be careful on Thursday. So that is very important to understand. All right, perfect. So this is a trading model that you can use. Let's find one more example actually just to hammer it in a little bit. We had another example on the same pair right here. So let's stick to this pair. Let's see. We had 23rd of May. All right, 23rd of May. Where is that? 23rd of May. Let's see. Right there. This is it. A previous day high sweep into the order block again right there. All right, nice. And then a target would be this first low right there. Let's dive into the 1 hour. All right. All right, we tap into it right there. Yes, we do. And right there, that would be your entry. Cover the ST high. This a 1.49. Now, in my opinion, I would want to aim for more here. I don't think this is I would love a minimum of 1 to 2 RR. So I will go on to the higher time frame again, and I will see, all right, what can we potentially aim for? Well, I know if we are continuing lower, we could potentially aim for these lows right there. So let's see if there is something on the 4 hour. Nothing really clear. All right. In this case, I would go first for the fair value gap fill right there. And otherwise, I would just place it on 1 to 2 right there. Perfect. Or even go for the mean threshold right there. Something along the lines of that right there. In this case, I would be content with a 1 to 2, just aiming for the 1 to 2 right there. On the 1 hour, let's see when we have to go break even. All right, we are in right there. When this first target gets hit right there, I would be break even. There it is. All right, perfect. So the important thing also to understand here is that when your target gets hit before an entry opportunity presents, then obviously you would not take it. So there's also an invalidation level right there. So if this target got hit before we actually got an entry even, then I would not take it, obviously. So this is exactly the one shot, one kill trading model. Again, go over these examples and study them for yourself. All right, perfect. Thank you.